Well, thank you very much. And thanks to everyone who's dialing in. This is exciting. This is the first in our series of online panel discussions for GAIN. And we really hope you're all well and keeping safe. We're definitely adapting what it was currently a very much in-person model of school and university talks to, for those of you who don't know, to do our mission, which is to inspire the next generation of investment decision makers and ultimately increase the gender equality in the investment management industry. But in the digital format, we're very pleased to see you all, and this will be recorded as well. So just to introduce this evening's discussion, it's on responsible investment. And we're very grateful to Oxford Venture Capital Network, with whom we're partnering specifically on this event. They gave us the theme as a particular area of interest for their students. And we are lucky that they have enabled us to make this open to other universities as well. So we have Cambridge students on the line, I believe, and we're very grateful to a host of societies there for distributing the event, from CamWib to QFIS, Judge Business School, and the Robinson Finance and Investment Society. So thank you to all of you. And just a word on me before we go on to the panelists. So I'm a co-founder of GAIN. I'm also a fund manager at Troy Asset Management. My name's Charlotte Young, and I'm very happy to be moderating this evening's panel, on which subject we are really lucky to have such an incredible host of panelists today. The GAIN network has over 100 women who have volunteered their time to inspire and to inform that next generation. So today we are very grateful to Orly Arav, who is a managing director at Lions Head Global Partners and an impact investing and development finance specialist, where she has around 2 decades of experience. So thank you very much, Orly. Kathy Gromotka, who's a principal at Downing Ventures, and sits on the board, amongst many other things, of A-Day, which we'll come on to discuss, a women's apparel company that has a specific responsible focus. And last but not least, Shivani Oberoi, who is on the GAIN team, as you might have overheard earlier. Shivani heads up our university outreach for Oxford, and she is an investment manager at Oxford University Endowment Management, where she's been for 4 years. So thank you, Shivani, and to all of you. We'll just kick off by, before we get into the meat of responsible investing, a little bit of background about what all of you do, and perhaps, Orly, if you could start just on what sorts of investments you make, and who you do it for, who your clients are.
Okay, thank you. So my name is Orly. I currently manage a new fund that closed in December 2000. Times looks like it's been 20 years, but it's only 2 months. But in December 19, we closed the fund. It's called the Facility for Energy Inclusion. And we fund renewable energy projects up to 25 megawatts in Africa. So the shareholders of the fund are development finance institutions like the African Development Bank, the Norwegian Development, funded by the government of Norway, and the German government. So we kind of serve governments or multilaterals who wants to see development in Africa, and particular access and more renewable energy. So on one hand, I actually serve 2 types of clients, because on one hand, I have my shareholders that I need to please, and I also have a team that I need to keep working with. So that's my second part of clients. But the last but not least are the developers of power projects in Africa, which we work with and help them actually to make things happen. And I don't know how many of you tried this, but it's hard and takes a lot of time and a lot of patience. So we call it the PPP model, and it's patience, patience, patience.
Great. Kathy, could you give us a run through of what type of investing you do?
Yeah, sure. So I work for Downing LLP, which is an investment management firm that's been around for 35 odd years and does a whole range of things, including development capital, and as of about 5.5 years ago, venture capital. And I sit on the venture capital investment team. So we invest in early stage technology businesses across a whole wide range of sectors. So We broadly categorize them based on consumer, whether they serve the consumer, enterprises, or the healthcare sector. And I specialize mostly on consumer products and the enterprise space. So occasionally do healthcare deals, but my sweet spot's really in consumer and enterprise. And we invest all the way from seed stage. So for those of you not familiar with that terminology, it means really very early days, may have some early revenues, all the way through to Series B, which means they're at the stage where they're raising funds to really scale up their operations.
And Kathy, we were talking earlier about how you got into venture capital, because I think that's probably the most common question in regard to that particular niche of investing. How do you get there? I'd be interested to hear your personal journey to your current job.
Yeah, absolutely. Do you want me to dive into that now, or is Shivani going to do an intro? Yeah, okay. So I went to business school in Oxford at Said Business School, and one of my classmates, Michael Tafula, actually got an internship during the MBA at Downing through Twitter. So he was really actively looking to break into venture capital and just found a bunch of investors that he admired, including Czech Warner, and engaged with her over Twitter. They got into a few debates, and then they brought him on board as a part-time intern / associate. And I'd actually joined Microsoft after the MBA, but was looking at what else to do and what to do next, and was lucky enough to have a classmate / friend like Michael, who made it clear to me that someone with my background would be well suited to venture capital. And I think it's a myth that I believed, that you need to have experience in investment banking or accounting or really more of a finance background to work in venture capital, which I'll just say right now is a complete myth, and it's not true. Venture capital is all about tapping into finding the best entrepreneurs and tapping into communities where you can find exceptional entrepreneurs, which means coming at it from diverse backgrounds. And actually having a background, I was at Bloomberg and then at Microsoft, having a background in enterprise technology really helped me and brought a new perspective to the team, which helped me through the interview process. But I'm not going to lie, it was scary. There were definitely times where I thought, wow, I'm completely out of my depths here. There's a lot to learn on the finance side. And again, it was really helpful to have someone like Michael to guide me through the process and say, fundamentally, as a venture capitalist, you'll be doing 4 things. You'll be generating deal flow, which means finding investment opportunities. You'll be convincing the best entrepreneurs that they should be working with you. Then you'll be structuring the deal and executing the deal. And granted, it takes a bit of technical skill at that point in the process. And then lastly, you'll be adding value to those portfolio companies. So really 3 out of those 4 things don't take any background in finance. And I think that really gave me the confidence and helped me through the process.
Great. And Shivani, can you describe what you do and who you do it for as well?
Yeah, absolutely. So hi, everyone. I'm Shivani, and I'm an investment manager for Oxford University Endowment Management. So we invest the charitable assets, so that's largely alumni donations that have been built up over the years of the University of Oxford, and many of the constituent colleges of the university as well, and a number of trusts associated with the university. So the university is kind of our key client, and we look to preserve the value of the endowment over the long term, and continue to generate strong returns over the long term to fund education and research of the university. So that's comes across in kind of 2 aspects. One is kind of grants and scholarships, and then the other is research projects that the university is running. So yeah, that's the mission. And then in terms of how we enact that, we invest across a large number of sectors and geographies and asset classes. So I'm a generalist on the team, as is everyone else on the investment team, which means we spend time really across a number of areas. From, last year I spent time working in startup opportunities in India. This year I've spent time looking at farming technology and food technology investments. So real breadth across the spectrum, and all for the purpose of preserving the value of Oxford University's endowment over the long term.
It sounds like, in terms of your job, Shivani, particularly, perhaps to describe a typical day might be a bit of a challenge.
Yeah, there's no typical day, definitely, because we're all generalists, as I mentioned. We all do different things every day, and we're working on different projects all the time, but I'd say there's three kind of key areas of focus. One area is finding new investments, and there's many ways that we do that. But that's one of the key parts of the job. And then another part is, once we've found an interesting opportunity, we have to diligence that idea. So that's a big piece of work to get the idea over the line and ultimately invest in it. So that's the second kind of aspect of what I do. And then the third aspect is kind of continuing to evaluate our existing investments and ensuring that we're on top of what's going on with all of them and making decisions to buy or sell as required. So I'd say those are the three aspects of the job, but in terms of what actually happens within each of those, it changes every day, and every day I'm working on a different theme or idea or a different country or a different sector, and that's one aspect of the role that I really enjoy.
Great. And Orly, I know we spoke earlier, you clearly have a responsible investment focus, and I'm just interested because there's a lot of buzz around ESG and responsible investing today. You've had exposure to that area of investment for some time, and I'd just be interested in your view of that, how it's evolved, and how you got into it in the first place as well, before it became the sort of de rigueur style that everyone's hankering after.
So I'll be honest. I was brought up in Israel, and my first venture to the UK was because I got a scholarship to LSE to start studying at LSE. So I started at LSE, liked London, went back to Israel, started working. I was working for PwC and realized that the market is going to change, at least in Israel, with the true PPP, the investments in infrastructure. So convinced PwC to send me to London to work here. Had a really nice time, but couldn't stay from different reasons. Came back to Israel, and after 2 years, I really missed London a lot. So I just decided I'm going to look for a job in London, and whatever job they'll give me, I'll take. And that's what happened. There was this fund called the Emerging Africa Infrastructure Fund. At that time, it was a very small one, $300 million, that in infrastructure world, it's maybe half of a project in the international world. And there was like 4 people, and I think they couldn't convince anyone to come and work for them. And the headhunter sent me there, and I remember telling myself, what, they do $30 million deals? This is a joke. This is like the rounding errors on whatever I used to do in PwC, the billions. So, but they were happy to give me a work permit. And I said, okay, let's go. And that's how I got the job. I would never plan to go to Africa. Never. All I wanted is to work in London. And after 3 months, I just fell in love with the job. And I think what I want to say is a message: don't go with preconceived. It's a bit like a relationship. You don't go with your list. Go with open-minded and try something. And worst case, it doesn't work, turn back, find another job. So I think it's very important to bear that in mind. And I always tell it to people I meet, to give it 3 months and see how it goes. Because if I would go with my preconception that this is Africa and $30 million and this is like nothing in the world I come from, I will never get a job. I will never have the experience of a lifetime to work in Africa, which is one of my biggest passions, and really be able to make a difference. And so I was lucky. Really, I could have almost said I could be stupid and say no. And then I think if we look at how the market evolved, I think the early days, people took ESG as an obligation to do because this is how you can potentially get money for investments. So if you look at the development finance institution, that it comes like, it's a kind of the marriage. You want money, we will give you the money, but you need to marry our ESG performance standards. And people had to do it because that's the way they got the money. I think now people understand that actually they want to do it because it's much better for the business. And I think this is the biggest recognition we see over the last 10, 15 years, that actually it is a business sense and it makes a good business to follow ESG, to follow other practices, and not just because somebody gives you money and that's a cheaper way to finance yourself. Because if we don't take into account our impact on the communities we work with, you will have attacks every day. And I always give this as a simple example. In the early days, the oil and gas companies who worked in Nigeria, if they would have invested around their communities with schools and education and power, nobody will burn and kidnap their people. And the cost of one of these attacks will be 10 times, if not 100 times more than putting a school and kind of working with the community and understanding that they are part of what you do. You can't just be in your own world with your fence and say, this is me and you don't care, I don't care about you. So yeah, I think it's finally the becoming more embedded in a lot of business. And I think if I have one more line to say, is if we look at today at what Larry Fink has advised his shareholders last year is about purpose, companies and purpose, and not just returns. So if the biggest investor in the world tells you that, then it's probably we achieved something.
Yeah. And Kathy, on your startup piece, how do you think about assessing the sustainable credentials of prospective ventures that you might back?
Yeah, it's a good question. And, I think one of the things that I struggled to reconcile a little bit when I joined Downing in first instance is I grew up in developing countries, hence the confusing accent. So I lived in Niamey in Niger for 6 years. I lived in Vietnam for 6 years. My dad does malaria and AIDS control in developing countries. And, I'm a venture capitalist. And I think that term itself, I thought, well, how am I contributing to the world based on the environments in which I grew up? And actually, Downing isn't an impact investing fund, to be very clear, and doesn't pretend to be, but our ethos is to make investing more rewarding. And what we mean by that is that when we look at investment opportunities, we look for genuinely investments that make the world a better place, but are also profit orientated. And so let me give you some examples of that. So A-Day, obviously we can come to, but there's another portfolio company, Open Bionics, who do 3D printed prosthetics for children with limb differences. And their motto is to turn disabilities into superpowers. And, why did we invest in that business? Because, well, we think it has a tremendous growth opportunity. And, we think we can make a healthy return for our investors whose pensions and savings we're responsible for and looking after. But at the same time, that's a super rewarding investment. And we're extremely passionate about the founders and the company and their mission. And there's a whole slew of other investments from our EdTech, education technology portfolio, who are helping teachers design more engaging curricula and engage with parents and with students, to A-Day, the women's apparel business I sit on the board of, whose entire ethos is actually to educate consumers to buy less and to help reduce the inventory problem that the fashion industry has and the significantly negative impact that the fashion and specifically fast fashion industry has on our environment. So there's a lot of sustainable investment there's a sustainable investment thesis underlying even a financial profits driven investment thesis. And I find that super exciting. So those are just a couple of examples. And the other point I'll just make on that and why those make such good investments is that purpose attracts talent. And we see that with so many of our portfolio companies who just find it a lot easier to find people who are genuinely passionate and excited to work for them. And the teams you can't compete with are the teams that are so passionate about what they do that they will work harder and outwork everyone else. So we love investing in purpose-driven businesses because we know that they have an edge when it comes to attracting and retaining talent.
Yeah, that's definitely seems to be a real sort of selling point, both for, as you say, for the employees of a company, but also for its customers. If there's a very clear purpose, that just really brings a cohesion to the brand.
Absolutely.
I should say at this point, anyone who has a Q&A, we have a Q&A function and we're going to incorporate all of your questions as much as we can into this discussion. So please do submit. We've already had a few already, so thanks for that. Shivani, just on that purpose-driven aspect, because this is particularly interesting given the endowment's investment objective and the fact that you're investing on behalf of the university. And how do you think about that when you're trying to incorporate a very long-term time horizon And I think, Uli, coming back to your point, having a long-term time horizon, you can't afford to neglect certain aspects of being responsible. How would you think about it when you look at the investee funds that you're going to potentially invest in? For Shivani.
I don't know, it looks like she froze.
We might have we've lost Shivani. Sorry, are you Shivani? Well, we've had
Sorry, Charlotte. My Zoom cut out for a second. Can you just repeat the end of your question?
Yeah, sure. So it was just in terms of how you incorporate thinking about purpose and thinking about being responsible in the context of who you're doing it for and what your time horizon is and for the endowment. Oh, I think we've lost her. We'll come back to Shivani. But just for Uli, I'm particularly kind of interested in this whole concept of, doing good is not incompatible with making money. And I'm just kind of interested. Could you give us an example of maybe one investment that you've made where the fact that you've considered all of the social aspects and the community that's around you, how that has led to better returns for investors?
I think an interesting example, and I'll take a venture example, is actually one of the investments we made when I was running the Soros Impact Investment Fund. So we have a company, well, they have, it's not me anymore, a company called Espada. There is actually a Harvard Business School, and taking what Kati said, there was really good entrepreneurs we met in the previous fund, and we decided just to back them. So we said, started with $10 million, and we said, here are $10 million, and we want you to go, they were based in India, come back to us with ideas on how do you want to invest the money and what do you want to do about it. And they started investing in companies around the value chain of agriculture. So that was the first thing they took. And they actually worked with SMEs to improve the production of bananas, potatoes, fruits. But then if you know India or any of our markets, the emerging markets, you have a product, you need to take it to market. So what do? They invested in cold storage and then in supply chain companies. So in a way, they created an interesting thesis that not only we work with our companies, so each company, we're creating this aggregate where they can work together and replenishing these gaps in the supply chain through other investments. Now, because they were working with companies that had direct impact on the farmers or the buyers. So actually by working not only with the company that invested, but also with the employees, for example, then they created these much more sustainable businesses. And later on, some of these investments were bought by, well, today the Liechtenstein family, the royal family, was the new impact investment called LGT Capital, bought significant investment into Espada. So over the 10 years that SCDF investment, we started by 10 million, ended by around 80 million investment with the same team around different themes, but using this idea of working across the supply chains on what they worked. And then this proved that actually making sure that not only the entrepreneurs are looked after, but also bringing in their customers in a way that can serve everybody together. And I think one of my favorite investments that they've done, it's the Uber for tractors. So it's a company called, I forgot the name of the company, but it's for farmers. You can order a tractor for 1 hour to come and plow your field. So that helps the farmers because you think about how to improve their work. You have an investment in a company, and then these farmers sells to some of your other companies that are buying the products. So it's kind of looking at the whole holistic approach to the stakeholders. and it's a huge success story. And what I all started by believing in an entrepreneur and supporting the entrepreneurs and allowing them to grow their business.
Great. I mean, that sounds like very much on the edge of doing both of those things, doing the right thing for your investors as well as for the underlying consumers and all the stakeholders. We're getting Q&A in thick and fast, and Shivani, we might come back to the endowment question. There's a sort of question that's come up which I think might be particularly pertinent given we've just discussed Uber for tractors and some of the potentially higher risk, higher reward business models. I think this is a question for Kathy from Imogen. Imogen Parsley sent this in, and she says, investing comes with an element of risk. What have been your experiences of what happens when it goes wrong? And I choose you, Kathy, because I know in venture capital you don't always get every time a winner.
Yeah, well, and I think that's also something that it does actually, you can understand it conceptually before you break or before you start your career in venture capital, but it does actually take a few years to fully internalize that. And I'm not at that point yet. I've only been in venture capital for 2 years, so can't claim to have been through the full cycle. And everyone says, it really takes 10 years to know if you're any good at this job. So the feedback loop is pretty long. But fundamentally, venture capital, the economics of our fund is all about outsized returns. So if you make 10 investments, you expect that 2 of them will, quote unquote, return your fund or will be the winners. You actually expect the majority of them to fail. So from that perspective, it's interesting because when you set out, obviously every investment you make, you have to have the belief that this can be the next Facebook, the next Uber, the next Apple, the next Google. But you also know that statistically, that's just not the case. Most of your investments are actually going to fail. And Downing's at the point now where, in a fund's life cycle, you come up to the point where you start to see, the first kind of businesses fail. And it's interesting for me to see that, and obviously to look back on the original investment thesis. And, the reality is that nobody can predict the future. And, would we have known that a business would fail for the reasons that we believe it's currently failing? No, you just can't predict the future. But in venture capital, that most of the investments you make, will maybe return your money, but most likely will fail. So it's a bit of a strange one to wrap your head around when you're getting started.
Yeah, it really is. And Shivani, you clearly are responsible for managing the endowment of Oxford's money, and with that, that's a huge responsibility. I imagine the students will not be best pleased if 95% of the investments fail. How do you think about risk in terms of answering that same question as well, and making sure that your returns are good enough over a long time horizon, but also making sure that you're preserving capital?
Yeah, sorry everyone for dropping off. I think my internet crashed, but I'm back now. So yeah, in terms of how we think about risk, I think diversification is key. So we invest across many different geographies, many different sectors, and many different asset classes. As I discussed earlier when I was giving my introduction. So I think that's the key way for us, that we kind of mitigate where there might be high risk in one area, that's kind of offset by other areas in the portfolio. So we try and construct a portfolio that's fairly balanced overall, containing a mix of different assets which are each exposed to different kinds of risk factors. So for example, we have about a 10% allocation to venture capital, which is backing startup companies like the ones that Kathy has been talking about. But then we also have a portion of our portfolio which is invested in real estate opportunities. So for example, in UK real estate and land, and having those different investments, each with different kinds of risk profiles, does really help us to kind of think holistically about the portfolio and how we can continue to generate stable returns over the long term. So we have a 5% real, so 5% above inflation return objective. And the goal is by diversifying our portfolio in this way, we'll be able to meet that return objective even during difficult periods such as the period we're in now.
Okay, great, thank you. We've had a question in from one of our Cambridge ambassadors, Sophie, and I think this is one for you, Orly, potentially, because we spoke about the integrated oil companies and particularly their unsustainable practices. So Sophie asks, regarding these industries that may be seen to be fundamentally incompatible with sustainable practice, e.g. crude oil, how do you think we'll be able to change these industries' practices in spite of the fierce opposition that is likely to come from them?
Well, I do think there's been a huge change, and oil and gas has never been my big sector, but I can see that if you look even at the companies, they're all now integrating renewable energy into their mix. So I think firstly, understanding that whatever they do, they need to now do under safeguards and try to reduce the impact on the environment. I think we also we can't put all the blame or everything on their shoulders, because as long as there'll be demand for oil, there will be supply. So let's not forget, when you demand something, somebody will sell it to you. So I think it's more important to put the pressure that they do it in the most responsible way and without impacting the environment. And I think that the fact that a lot of these big companies actually has huge investments in renewable energy and trying to do the right mix is always a very good step, that they make sure that the workers have the right equipment and we are not abusing that they work with the communities. So I think it's there are things we can't say, let's close them and disappear, because they will come in a different way, and our economies cannot survive still without oil and gas. But you can contain it to a way that, and that's where the pressure comes in from the consumers. I will buy a product as long as you can prove to me that you're doing the utmost. And I hope also with technology, there will be additional technology that will reduce and minimize this risk, and the practice of doing the business will change over time. I always remember the example of Nike, that they had such a huge pushback from the consumers on the way they produce the shoes that they have changed their whole way, and people did care about it. So I think this is where we, as responsible, not just investors, responsible people who care about what happens in our environment, can put our word out and put the pressure to make sure that whoever supply whatever we need knows that we are going to use alternatives if they don't do at least the maximum they can.
Yeah, great. I suppose on the similar theme, Kathy, when you're clearly very involved in the management of or at a board level with your companies, your investee companies, and that's part of being in venture capital as well as it is in private equity. So you have a certain say over how business practices are conducted. How do you try and steer on the more sustainable side businesses towards just good corporate governance and good societal relations? How do you factor that in when you're as a board member interacting with the management?
Yeah, 8A is the perfect example, and in all fairness, they make my life really easy because their ethos is all about being sustainably driven, and the founders Nina and Meg spend a lot of time thinking about how and what should they be measuring, and they're actually going through a process right now of figuring out, should they become a B Corp. They're already doing a lot of measurements in terms of the impact that each garment they're producing is having on the environment. They do a lot of work partnering, or first of all, diligencing the factories that they work with. They have a really rigorous criteria set that the factories have to meet before they decide to partner with them. And, they do a lot of that work for me, actually. So I haven't had to push anything on that side. And when it comes to governance as well, a lot of the work that we do is making sure they've got responsible practices in terms of how they're treating their staff and how they're treating all the way down the supply chain, the partners that they work with. But again, in fairness, 8A have made this really easy for me. They bring it to the agenda without anyone on the board having to bring it up, and do a lot of that work anyways, because it's part of their ethos and the company culture.
Great. Well, we've had a few questions in along a similar theme. One is for you, Kathy. First of all, is MBA a good way to get into venture capital? And then the others are, well, maybe for me, one's I'm a linguist, I'm a language student, and I want to get into investment. Am I able to do that? So I can come onto that. And another one about transitioning from consultancy to investment. So perhaps one for Orly on that one. But Kathy, MBA, is that the right way in? Is that the only way in, or is it just it's one of a few good options?
It's one of a few good options. So I would say that the road to me finding a job in venture capital would have probably been a lot longer if it hadn't been for the MBA, and largely because it meant that I met someone who then opened the doors for me and kind of helped me through that door. And why do people do an MBA? You do it to have fun, you do it to learn, you do it to build your network, and hopefully the latter two mean that it furthers your career and it opens up new career avenues for you as a result. You become an expert generalist. And I would say the network piece is probably what, in terms of breaking into venture capital, is the most useful, because you might meet people who've worked for venture capital funds or founders who have connections into VCs that can then help you get a foot in the door. So from that perspective, the MBA was definitely useful. And if you don't have a background in finance, so if you're a linguist and you've never looked at a P&L, balance sheet, cash flow before, I would say the MBA was definitely helpful because it gave me a base layer of understanding. Again, back to what I said earlier, the technical piece of the job is, from my perspective, a quarter of the work, but it is still a piece of day-to-day work. You still have to analyze financial models. I think someone else asked, how do you look at profitable businesses? Well, you still have to be able to understand a business plan, and there's a bit of technical understanding that you need to have, where if you have no background in finance and economics, the MBA was helpful for me. But is it a must? Absolutely not. And actually, diverse teams is something a lot of venture capital funds care a hell of a lot about. And I love that about the industry. And, we looked at Downing's team and we saw we've got 2 MBAs. Ooh, should we hire a third? Do we all think the same because we've all been through the same program, more or less. I don't think an MBA is a must at all, but for me, it was helpful.
And just to add to Kathy's point there, I agree that the technical aspect is important, but it's definitely not the major part of the job for me as well. I'm actually studying for the CFA, the Chartered Financial Analyst qualification at the moment, which is great because it's helpful in terms of a number of the kind of hard and technical skills required for analysis and required for making investment decisions from the quantitative perspective, but actually a lot of it is about the qualitative side too, and being able to assess management teams, being able to understand people and understand networks, and understand what people's edge is, and what long-term themes might persist into the future that that as an endowment fund we can capitalize on, and that kind of thing, which actually is not really doesn't really require those technical skills. So it's definitely kind of important to have a base in it and to build your skills in those areas, but you don't necessarily need to have that coming into the industry.
I really think it's also the ability to think it outside the box and connect the dots and use a lot of common sense and logic. And actually, when I heard linguistic, I think the amount of logic you need for that type of studies, probably on some MBAs you might learn less. So you can learn the skills, but the ability to look at something and kind of infer from other experiences and say, okay, if I know this can help me to understand what I'm looking at. I believe this is the best skill you can bring to any investment. And finding somebody who can run the model, it's much easier than somebody who can connect the dots and put the big picture from the little pieces of a jigsaw.
Yeah, absolutely.
Great. Well, I think that answers what skills do you need, and can you be a linguist? I'm a linguist, so hopefully that is another answer as well. Just on the there are obviously lots of different things you need to be able to do to do this job. Interested, maybe Shivani, on what you found the hardest part about the job particularly for someone coming into the investment industry, perhaps without that technical background? Let's say this linguist attendee that we have coming in. What are the really hard bits, and what advice might you give to that person entering the industry?
Yeah, I think the hard bits is definitely the jargon and the technical aspect to begin with, because you kind of get thrown in at the deep end, or at least I did, and I knew very little, and I joined and all these terms are being thrown around, and actually none of it's that, or a lot of it isn't that complicated, but it's just understanding what's actually being spoken about. And so I think it actually took kind of maybe even 2 years to get up to scratch with that, and doing the CFA qualification alongside. But my advice would be on that is to definitely just ask as many questions as you can at the time, because what I found is sometimes I didn't ask questions, and then it would come to like 6 months later, and then I'd have to go back to things that I hadn't asked about. And so I think the important thing is to really build your knowledge as you go, and to not be afraid of asking, because I think when people, and I'm already finding this about myself, I've been in the industry 3.5 years, and I'm already starting to slip into that mindset of just saying these terms and forgetting that actually many people don't know what you mean by that. So so that's one thing. And then I think another not difficult aspect, but just something a bit different to what I was used to, is that it is such a male dominated industry, and in every setting, or in most settings, you do really notice that. So I quite often would feel, going to annual meetings and stuff in around the world and in London, I'd feel very out of place with that. So that's one other aspect that was just very different from my school experience and my university experience. But that's something that can be fixed in the long term. The more and more women apply and push themselves to consider roles in this space, because they're definitely there for you to take. And people want more women in the industry, and it will help improve the industry as well, and lead to better decision making. And there's been studies around that too. So yeah, my advice would be just to really kind of be ambitious about it and push yourself, and don't feel kind of held back by the fact that it's a male dominated industry.
Definitely. I have no other words to say it, but I always say have a chutzpah and just be bold, because all others do the same, and we should not be shy on, because we are as good as, at least.
Orly, what's been the thing about the industry that you would most like to change? This is a question from one of our attendees. Well,
I do think that the fact that there's not, again, the development finance world, at least the development finance institution, I've been observing there are more and more women doing part of the work. And actually, if I look at the senior management in some of them, we have top management by women, which is great. So I think this is a good change. But I think we need to facilitate. A lot of comes from a network, and I think, again, I can speak for myself. Coming from Israel, I definitely had no network in the UK and not in Africa. So part of what I advise a lot of people, especially if you go to the universities, and don't underestimate the importance of networking, meeting people, listening to different experiences, different views, and have people you can always count on to have an advice, and use our network, the CHIM network, to help you and look at it, because this is the way. I think the big differentiation I found between the kind of women and male kind of investors, I don't know how, but they always have a network. If it comes from school, or it comes from the football, or from whatever. And I found that for women, it's always something different. And I think this is a big differentiator, which is very important to have. And over time, also brings you to new roles. Like I can say that the role I got today is just because, but they knew me from before, and they kind of called me and say, do we want this role? I didn't even look for it. And that's what happens a lot, I think, in the male community, that somebody, you call him. And so I think create your own opportunities. And I do hope over time we will have more and more opportunities that can replicate this. I don't know what's the magic, because that would be great to know. Maybe we'll open my own VC when I'll know that. But but yes, I think this is very important. I would like to change it, that, you know, women can be going into this industry without doing the same, less efforts than currently they still need to.
Yeah, Kathy, what's it like in venture capital? Because clearly you're all in different sectors of investing in terms of diversity.
It's interesting because whenever I go through my network and make introductions, my network skews heavily female. So I almost feel like I've not been very diverse in that my go-to fellow VCs are all women. So I clearly need to be a little bit more diverse in who I hang out with. But I've got an amazing friendship group / crew of female VCs. And it's one thing I love about the industry, actually. It does feel very collegiate and collaborative. We all started as associates around about the same time and all kind of went through the same phase of, oh my God, Shivani, information overload, and texting each other about terms that we don't understand, or founders being dismissive or rude to us because we're only associates and therefore they don't want to meet with us. And so we've kind of all been through that just phase of experiencing the industry together, and they're all women. So my kind of sample size is actually quite diverse, but obviously there's a long way to go more generally across the industry. I think the good news is, at least at the more junior levels, that is definitely changing. My team, we've only got 2 people from the same country on our team. We're insanely diverse. Michael's from Uganda, I'm German, we've got someone from Italy, we've got someone from Northern Ireland. So I feel like I've had a very unique experience of venture capital, in that it's a fairly diverse environment that I've been experiencing. But I know that's not the case. I know that's not the case everywhere, and especially at the partner level, there's a lot more work that needs to be done. But I'm pretty optimistic that we're getting there. We just need more people joining the industry, and we'll get there.
Great. Well, I think we've almost answered all of the questions. There are a couple more that are regarding personal investments, and perhaps, I don't know, Shivani, if you're able to respond to this, because you clearly invest across a really wide range of funds, which is how a personal investor might approach it. How would you go about actually incorporating responsible investing principles into those as an individual?
Yeah, that's a harder one, because as an institutional investor, you have many more options, and you have the ability to take bigger stakes in your investments. But one thing is when you're doing, say, stock specific research, you can incorporate some of the principles surrounding environmental, social and governance issues into your research of those companies. So just reading up a bit more about the companies and understanding how they meet each of those criteria. And then there's also more and more, as time goes on, kind of software solutions that try and do that analysis for you. So for example, at Oxford, we've recently backed a company that uses machine learning techniques to determine for any listed company in the world how closely they adhere to each of the UN 17 Sustainable Development Goals. And so then each company is then ranked according to how they perform in line with each of those goals. So I think it's a bit difficult now as a personal investor, but I think over time, the more and more of these kinds of softwares and techniques will start to come to the fore, because this is such an important area, and there's so many people are concerned about the personal impact of their personal investments. And so those kinds of softwares might be able to facilitate that decision making. And I know there are some apps now that help with that as well. So I think have a look out there for the kinds of kind of responsible investing software on a personal level. And then also, if you have the time and want to put in the effort, then you can also look at it on a stock specific level as well, and see how companies are adhering to kind of your ethical principles. Great.
And I had another question about the consultancy. It's clearly a popular one. Maybe Orly, if you could answer, if you were to start your career in management consultancy and then transfer to investment, is that a good path?
Yeah, I think, as I said, I think the most important is to get, I actually started in advisory and I started in what we call today big data. So I was an econometrician by profession and played with numbers and models and then kind of did a lot of things based on it. So I think the nice part about, at least what I've gathered in consultancy, that you have an exposure to a lot of sectors sometimes, and especially as a junior, you do a lot of type of work. So that's actually a very good inroad to go to an investment, because you, as I said, you come with a very broad background. You have they have training programs that can teach you more about the modeling, how even to present things and you know, putting things on PowerPoint. It can be, if you want to really achieve it, it's not trivial just to put a few bullet points. So all of this, if you do them and you have these skills, they are very valuable to become an investor. So I don't think there is a right path or wrong path. I think it's first the opportunities that you have when you start looking for your job, and as I said, stay open-minded, and most important that you find something you feel passionate about, because going every day to a job you hate really doesn't worth it.
Yeah, the only thing I would add to that or supplement that with is, you know, to really find your superpower, because we do see a lot of applicants coming from management consulting. I mean, I'm specifically talking about venture capital here, not the wider investment management world, but we see a lot of applicants coming out of Bain, McKinsey, BCG, looking to break into VC. And it's really about differentiating yourself and just really highlighting, you know, all right, the hygiene factor here is that you've got clearly analytical skills. You know, you'll have a decent network because you're coming out of, you know, a great firm. But what's your superpower, and what's the new dimension and the new perspective that you're bringing to the team, and just really highlighting that.
Brilliant. And then maybe just to end, and this is a question that we like to ask most of our panelists, starting perhaps with you, Shivani. What's the best piece of advice that anybody has ever given you, or the most inspiring thing that somebody has done that's motivated you?
I think in terms of best advice, I think I already gave that one away earlier, which is when I said ask questions and don't be afraid to do that from an early stage, because that's the best way for you to get up the learning curve. You can kind of do as much work as you want, but really unless you engage with the kind of tasks you're given and you know, ask as many questions as you can to learn more, you won't get up that learning curve. So I think that's the best piece of advice. And then in terms of other things, in terms of for women in investment management, there's a lot of networks out there. So for example, I'm a member of the Women in Private Equity Network, and there's many other such things. And I think one of my female colleagues told me early on that was a good way to kind of see a different side of the investment management industry that maybe I didn't see so much during kind of regular meetings I went to, and I did that, and I think that's been great, because now I have a bigger network through that. I now have a bigger network through doing work with Gain as well. So I think it's finding ways, thinking a little bit outside the box, and finding ways to kind of expand your network into other areas other than kind of what's immediately presented to you.
Great. Orly, what's the best piece of advice that you've been given?
Find a good mentor.
Find a mentor.
Find a good mentor that can help you learn and support you in your journey.
Great. And Kathy?
Learn how to write. And what I mean by that is not, obviously literally learn how to write, but learn how to communicate effectively in written word. So much of my job is writing investment papers, investment memos, trying to convince people, that we're great fun to work with by writing about investments that we make. And, I've written essays at university and they were never particularly great. That was never my strong suit. And it's, it was, again, Michael, who was like, learn how to write. So I took a writing course and just really dug my heels in to figure out how to become good at conveying ideas on paper. And I have to, honestly, that was a great investment in myself, is just learning how to learning how to write well, learning how to story tell properly.
Yeah, I would completely echo that as well. So Kathy and I work in very different areas of investment, but I would agree with everything that you've just said, in that so much of it is about communicating and writing effectively. So it's actually a skill that so many people develop during university, and particularly humanities students as well, who might think, oh, I'm not suited to investment. Well, actually, you've developed a lot of the skill set just by writing those regular essays for your degree.
It's the only point where I envy the lawyers, because they write very well, and they can write it. They learn how to write something in very orderly manner. But you can imagine for a non-English person to learn how to write this, how difficult it was. It was. I can say it, but I agree. I always say, tell the right story, and you need to know how to tell it, and it's invaluable skill. I fully concur.
Great. Well, thank you so much. Thank you, Kathy, Orly and Shivani. We really appreciated it. And thanks everyone for dialing in. I hope you found that as useful and inspiring as I did. And I would say that this is just the first in our series. So we have a few more online panel discussions coming up in May, of which the next is actually on Thursday at 1 p.m. And I'm going to be on the receiving end of the panel questions. So please, if you're interested, look us up. We're on LinkedIn, GAIN Girls Are Investors. We're on Instagram, and we're also compiling a mailing list. If you'd like to be part of that, you can look at our website, gainuk.org, gainuk.org, plug that twice, and you can sign up to our mailing list, where we can tell you all about upcoming events, but also workshops, which we're going to be doing increasingly, given that internships are going to be problematic potentially for some in light of COVID-19, which we've managed to not talk about at all. But we definitely want to be able to provide more and more information and inspiration for the next generation. So thanks so much for dialing in, and we'll hope to see you soon.
Thank you.
Thank you, everyone.
Bye-bye.
Bye.